Oh gosh, look at the crowd.
Come this way.
Those who spread goodness radiate happiness to everyone around them. Introducing LOLC Finance Credit Cards. Fuel the goodness in you.
Welcome to LMD TV. I'm Ashwini Vedakan. Joining us this week on Talking Business is the founder and CEO of Securo and the chairman for the Digitalization Committee of the Capital Market, Naresh Abesekara. Welcome to the show, Naresh. It's good to have you here with us.
Thank you, Ashwini, for inviting me. It's a pleasure to be here.
Naresh, Sri Lanka's all-share price index dropped down to its lowest since October 2020, and although it gained ground thereafter, what do you think contributed to this?
I think, Ashwini, if you look at markets, whether it's a retail, apartment market, a vehicle market, whatever it is, markets fluctuate. It has its ups and downs, and it's something that is not unusual but normal. But if you look at this particular instance, what happens is there are two types of investors. You have the mature seasoned investor, and if they're buying stock in a company, what they'll do is they'll understand that company, go through the research, the business strategies, the market it operates, its financial track record, and invest. So what we need to distill out is the fact that has any of those components changed due to that volatility? If it hasn't changed, the fundamentals of that company hasn't changed, the valuations won't change. But what has happened now with digitalization and all of that is you have a new, fresh, first-time investor base that is coming into the market. Now, there's a tendency when this happens, even though we have the digital education channels, the Twitter accounts, YouTube accounts, research reports, they tend to not do in-depth research and follow the herd. And in such a situation, the slightest macro level uncertainty or global issue or whatever happens, then they panic. They panic and sell. And when they panic and sell, they just match whatever orders that come, and then the stock price falls. So if you look at market volumes in the recent few weeks, it has come down by about, market turnover has come down by about 65 to 70%. So it's only the investors that are panicking and selling that is basically literally driving the price down. And in any economy, you'll have macro level uncertainties, macro level complexity, you'll have global issues coming in, people might declare even war. But what you need to fathom is, does any of this have an impact on the performance of listed entities? If the answer is no, then there's no impact, right? Obviously, the whole world will feel the impact, but there's no significant reason to get out. But if you look at the entire, if you look at all the listed companies, their performance, you have historic highs. You have all listed entities have performed exceptionally well, and it's one of the best results historically. So I feel it's pretty much bordering on panic selling, and when this panic selling kicks in, and if it hits the portfolio 50%, then you have the margin calls. If people are borrowed, you have the margin calls where forced selling comes in, and it's like the retailers digging their own grave because they are driving the market down. But what the retailers need to be conscious about is if their fundamentals haven't changed, the companies that performed very well, their valuations don't literally change.
Now, with the world embracing digitalization to improve efficiency, how do you think the digitalization of the Colombo Stock Exchange could help Sri Lanka?
Yes. So I'll give you a bit about how we got into digitalization. So with the first lockdown, at that time I was on the commission of SCC, we realized that the market can't operate. Right? It was shut down for a couple of weeks. And then we looked at each touch point and realized that it needed to be digitalized. At that time, we didn't even have online account opening. Nowhere in the country did you have online account opening through app. So what we did within a period of 3 months, we developed the backbone for online account opening with the CDS accounts. That same infrastructure is now used by the financial institutions, the banks and finance companies can use that automated interface, and looked at every single touch point to make sure the market operated, right? And what we also realized was, right, Sri Lanka has a 35% financial literacy rate, right? So with the digitalization, what we wanted to do was we applied a mobile first quadruple play strategy, Mobile first means basically we put all the content, whatever that the investor needs, in the palm of his hands, right? Where he can open an account, look at the research reports, develop that financial literacy, understand capital markets, because at the end of it, it could, the richest people in the world, if you look at the Forbes billionaires, the richest people in the world have their money in equity. It's a hedge against inflation, and it's the best form of investing because you bet on somebody, a management team, right? If that team is good, basically they perform, you get a profit share and your valuation goes up. Best example is Tesla. So we want to democratize this process and take it to the retail base, take it to all four corners of Sri Lanka, and which basically we achieved, where we produced the account opening time. Earlier it was about 10 days, the manual process. Now it's come down to about 1 day. 97% of our retail investors today onboard digitally, right? And the investor base grew to active base by about 120%, right? And what we saw here was the fact that now all the account opening is coming from younger investors, less than 40 years. 83% of it is younger investors, right? So the mobile first strategy in terms of touching all corners of Sri Lanka is working, right? And so the first step is we wanted to use digital as a means to democratize wealth creation, right? Create financial literacy with YouTube channels, I mean the app itself, Twitter accounts, whatever, right? Create that financial literacy and help them basically understand how stock market operates, how investment will operate, and use and learn how to use money, right, to grow wealth. Now, those are some of the positives that happened with digitizing, but then there's the negatives also in that process is when you get fast growth coming in and when you drive fast retail growth, you have a segment of first time investors also entering the market, right? And for whatever reason, sometimes the first time investors don't, even if the research material is available, the education material is available, you don't put in that time to actually study and analyze why am I buying this stock, right? So there's this thing called herd defect in capital market. You follow the herd, right? And you basically buy, you invest into a stock. So in that type of investments, what happens is the slightest moment, slightest change, deviation, or any even if somebody says, okay, I'm going to declare war, right? Then you have a reaction coming in basically to the market, right? Or you have, you have certain macro level uncertainties. I mean, Sri Lanka has gone through various tough times, but at the end of the day, come out of it. But the issue is the fact that that slightest macro level change might have a huge impact because retail investors panic. So with that exceptional growth coming in, there's also a maturity level, right, of the seasoned investor that will also within a period of time need to be through education and all of that be sorted. So that is one of the key challenges there.
Now, given your prior experience with the Securities and Exchange Committee as well as the CSC, how do you view Sri Lanka's capital market at this time?
Yeah, so there are a few aspects. If you take the first one in terms of technology, I think now previously if you took the regional exchanges, they all had online account opening, right, and all of that in place. Now and they could function electronically, right? Electronic trading was possible. So today, if you look at it, we are on par with any regional exchange, right, on a technology footing. If you take regulation, right, literally the new SEC Act came out a couple of months back, which was pending for the last 15 years or so. And now that SEC Act is on par with any other regional regulation. Because when we drafted, at that time I was in the commission, when we drafted it, we looked at all peer countries and looked at regulation. So the execution and implementation of it is now happening, and the education process, right? So the Act itself has now mechanisms, right, inbuilt, where SEC has been given the authority to build market credibility. Like even if there are public people publicly soliciting shares to whatever, basically you have the muscle to deal with it. Previously which wasn't there. So I would say technology wise and regulation wise, now we are there. The next is products, right? So the regulation needed to come in for you to create the foundation to build the products. Let's say if you want exchange traded fund or whatever, previous regulation probably wouldn't have given you liberty to structure those instruments, right? So now what we need to do is, since our technology and the regulation is in place, we need to now innovate on market centric capital market products, right? And when I say market centric, we need to look at this market. What are the problems that our entrepreneurs are facing? What are the problems that our corporates are facing with regard to capital raising, right? And create those instruments that they can use to fuel growth in their entities, right? One example is, let's say for example, you want to put up a hotel. Now the entire financial ecosystem of the country should be designed from ideation to capital raising to execution of anyone, not only a high net worth individual or a existing rich entrepreneur. So if you want to put up a hotel today, you have to go to the banks, right? And they will give you a maximum 8-year to 10-year loan, right? And as you know, a hotel, your capital commitment on the loan repayment alone is not going to, it's a huge financial risk, right? Especially in terms of pandemic and all of that, the impact is higher. So now, giving that as an example, if you want to drive, right, capex based national infrastructure development in terms of hotels, infrastructure, you need longer term products, maybe 30 years, 20 years, whatever, where the financial burden is minimum, as well as with options basically. Can investors come in on a retail basis for debt, come in, exit, convert to equity, right? Then so various elements where you can manage the business cash flows, right? Business cycles, all of that. So those instruments need to come in place. So if those instruments come into place, then with the technology element regulation, what we are doing is we are making the capital raising to capital distribution directly to the hands of the entrepreneur very efficient. And if we get this formula right, then what we are doing is, let's say you have a great idea, you come into the capital markets, you might have various boards, these entrepreneurship board, these ideation board, these for mature companies, whatever. Now we have the Dirisavi, which is a small company which have got listings for the first time, right? Then from your ideation to capital raise into execution, process works fine and you drive innovation and growth in the country. So this is the broader equation that needs to happen and which has not happened for a very long time, because literally the capital market is not the secondary market what you see which is stock trading. It's the process of raising capital, using that capital to create something, create value, right, where others can participate in that process, where you drive growth and innovation. I think that is the next big challenge in terms of getting products that will work.
And on that note, we'll be going in for a short break.
You love the feeling of being renewed. To stay beautiful every single day. To breathe just like we do, because you are truly delicate, protecting the ones who've been with us through the years. With Sayalac Care, the only wood coating that truly protects you. Sayalac Wood Coatings from Jat.
Welcome back to the show as we continue our conversation with the founder and CEO of Securo and the chairman for the Digitalization Committee of the Capital Market, Naresh Abeysekara. Now, Naresh, are you satisfied that sufficient controls exist to monitor the stock markets?
I think definitely the controls and the mechanisms are in place, right? The surveillance infrastructure at the moment in both institutions, CSE and SEC, are global solutions, right? But now the market dynamics has changed. Now previously, a few years back, you had probably a 40% institutional, 40% high network and 20% or 10% retail, foreign and retail, right? I mean, you had a certain amount of foreigners as well. Can't tell the percentage off the cuff, but now it's a pure online retail market, right? So a whole bunch of retail investors trading. So with this dynamic, right, what the SCC and CSC also are doing, at least SCC, I'm not sure if CSC is also doing, is investing in the next generation of surveillance technology, right, which is in the process of happening, and they will be implementing the latest surveillance technology with more functionality, more features, basically more monitoring mechanisms to strengthen the governance framework around the credibility of the capital market. So that is happening, as well as the new SEC Act also gives, there's more muscle in it to regulate it.
We have seen a number of IPOs in recent months, but what more can be done to entice companies, big or small, to go public?
Yes, I think the broader equation there, Ashwini, is what I told before. How do you raise equity capital as against going to a bank and borrowing? Because there should be a fine balance between the two. The more debt you take, the more risk you put towards a business, right? Because you need to finance that debt. You need to basically pay interest, right? Your money is not spread to a longer period. But what the equity market brings is small investors, a lot of them invest their money, right, expecting that company to grow and perform, right? And what the equity market brings is creates a platform for anyone to take part in that ideation process. Example, Tesla. Tesla is the best example. The company's stock was stable, not moving. The company went through tough times to whatever, there were people panicking, right, selling, but there were a bunch of investors that held on to the stock, believed in the entrepreneur, believed in the technology, believed that there will be a solution to that complex problem, and suddenly you see it basically outperforming the valuations of all of the car makers, right? But for an investor, that's the value proposition, and the owners of the company, that is the benefit that they get, right? So an IPO process, whether it's financial reporting, whether it's basically listing your company, whether it's branding it, whatever, takes a diamond, right, nicely cuts it, polishes it, right, puts it on that ring and showcases it and adds value, right? Diamond by itself, without being polished, without being showcased, is of no value, and it gives a market value to it. It gives a price, right? A market driven price. I think this number one is, this concept needs to be understood by entrepreneurs, where it's coming to the market and listing your company is not a marriage that you can't come out of, which probably at the moment is seen, right, by many as it's a very complicated process, which is not. The entire process has been simplified in the last 2 years, right, to a great extent. And what they need to understand is there's a certain amount of growth that you can get, right, with bank debt, and thereafter if you want to fuel higher growth, you need patient, permanent capital coming from the system, and there's no risk there, because the investors also believe that they are buying into the equity of the company, and they also bear that risk. So I think the education process needs to come in, where we educate entrepreneurs that come into the equity market doesn't mean that they lose control, they still hold control, but it's about that process where literally if you have a great idea, let's say you give the capital free and get him to generate the profit and either share that profits in terms of dividends with the investors. So that entire concept needs to come into this market. Now in foreign markets, in overseas market, this is well understood, right? People create a company, even if the company is making loss, we've seen a lot of loss-making companies be coming into the market, and we also, from a SEC point of view, we also change the rules so that we look at various, we don't look at 3 years of profitability and all of that, because IT companies, IT infrastructure, you can't deliver it. So those rules also changed now to bring in those type of entities and come into the market. So we've also created things like SPACs, where you can create a SPAC, raise capital and go for acquisitions, So these type of instruments are new to our market, but for a brave investor with a vision, right, or a brave entrepreneur, it becomes tools to grow faster and take his company global.
Well, this has been an interesting conversation, and I definitely think we've all learned a little bit more about Sri Lanka's capital market at this time. Thank you for joining us on the show this evening, Naresh.
Thank you, Ashwini, for having me here, and it was great talking to you, and all the best.
Coming up, we have the latest updates from the LMD Nielsen IQ Business Confidence Index. Stay tuned. Welcome back to the show, and here's the latest updates from the LMD Nielsen IQ Business Confidence Index. The BCI edged up by 2 basis points from the previous month to register 124 in February to represent a 10-month high. This means that the unique index is 4 notches higher than a year ago and a healthy 15 points above its 12-month average of 109. As for the comparisons, the BCI is now only 2 points shy from its all-time average of 126. And it has gained momentum since the pandemic surfaced in early 2020. In April that year, for example, the index stood at 93 and it hovered around the 90 mark when the second and third waves of COVID-19 induced lockdowns and travel restrictions took effect. In fact, this is the 3rd month in succession that the barometer has headed north despite the state of the economy, the forex crisis, ongoing shortages of essentials, and an on-off power scenario. Nielsen IQ's Director of Consumer Insights, Terika Menedenia, explains, in spite rising COVID-19 cases, life seems to go on. Businesses and the people are learning to live with the virus, it seems, and the fear that it commanded in the past has diminished. As she notes, inflation has taken over from the fear of COVID-19. As far as the economy is concerned, leave alone the homegrown bad fruits that hang in the balance, there's the daunting prospect of global shocks, including the already spiraling price of fuel, which will only exacerbate an unprecedented forex crisis. And the Cold War surrounding the Ukraine-Russia-West standoff turning into a minefield that will have oil and other markets across the world running for cover. And of course, there's yet no real light at the end of the COVID-19 tunnel, with variants such as Omicron continuing to keep even the experts guessing as to when we will see an end to the chaos that grips the world. In the February edition of LMD, we asserted that the business community may well be taking a longer-term view, but it has to be said that until there's a revival of Sri Lanka's economy and an easing of the restrictions that the forex crisis has necessitated, this level of confidence will be hard to maintain. And we're inclined to say the same this time around, as there's a limit to what degree such resilience can hold. On the other hand, the business community may continue to adopt a longer-term stance if at the very least there's a resolution to the forex crunch in sight, and for that to materialize, there's a collective call for debt restructuring measures to be adopted. And that's all the time we have for you this week. Don't forget to subscribe to our YouTube channel and follow us on Facebook and Twitter. Thank you for watching and stay safe.